The ETF lies that are keeping you broke. Welcome. Wall Street's hype men won't shut up. Buy a broad ETF, sit back, get rich. Cute story, but the average investor pockets barely half the market's posted returns. Half. Today we're yanking back the curtain on 4 quiet habits that turn the perfect ETF into a paper shredder. Plug these leaks and you'll keep the money that's already yours. Section 1. The timing trap. Buy the dip. Sounds smart until you realize most people only buy after the bounce. Morningstar data shows holders of the biggest S&P 500 ETF have lagged the fund itself by roughly 1% a year since 2000. That gap isn't fees, it's the classic high buy, low sell two-step, choreographed by headlines. Fix. Automate a fixed dollar purchase the day your paycheck clears. You'll score the market's average price, not your emotions. Section 2. The ticker salad. Open any broker and 3,000 plus ETFs scream for attention. So we toss together a diversified, bull, tech ETF, cloud ETF, AI ETF, cybersecurity ETF. Peek under the hood, same 10 mega caps dominate every bucket. You thought you scattered your eggs, you just stacked them 4 high. Quick overlap check. If the top 5 holdings share more than 2 names, grab the cheapest, widest fund and walk away. Lower fee, actual diversification, done. Section 3. The leverage mirage. Triple leverage ETFs promise 3 times upside, then deliver 3 times fees, 3 times volatility drag, and, fun fact, an annual closure rate north of 50%. They're engineered for desk jockeys with Bloomberg terminals, not your IRA. Unless you can call tomorrow's close, treat them like fireworks, fun to watch, suicidal to hold. Swap in plain vanilla index funds and you'll never wake up to a delisted ticker. Section 4. The overtrading spiral. Commission-free trades turned us into phone-tapping day traders. Schwab finds the median ETF holder keeps a position just 1-2 days. Each flip incurs hidden bid-ask spreads. Call it 0.05 to 0.15%. Do that 5 times a year and you've vaporized 1% before lunch. Treat every ETF like a business you own, not a scratch-off. Write the buy reason, set an annual calendar reminder, then back away from the app. Time, remember that ingredient? Like and share this video if any of those stung. Smash like so the algorithm saves the next investor from the same face plant. Section 5. Putting it together. ETFs aren't broken, our behavior is. Automate purchases, kill overlap, ditch leverage, trade once a year, not once an hour. Nail those 4 and you'll pocket the gap Wall Street quietly skims from the crowd. Over 30 years that gap can double your retirement stash, no crystal ball required. See you in the next video. Subscribe. Stop letting the finance industry use your cash as its marketing budget. Pick one mistake, fix it today, and drop a comment on which one. Then check out the next video. How a 2 ETF portfolio beats most hedge funds with a fraction of the drama.